Now go ahead and start over with that story with the Eddie with the story for the movie.
Okay, I can't think of whatever the name of the movie was, but it was Eddie Murphy, and the gist of it was uh, Dan Aykroyd was in it too. All of them worked for this investment firm, and they were investing and buying and selling pork bellies. Well, Eddie Murphy was a bum on the street, and these two brothers saw him, and one of them made the other a bet that he could teach him to learn how to play the stock market, and the other brother and come out with an invest, come out ahead. And the other brother didn't think he could, so they were rich anyway. So what they bet each other was $1. So as the movie went on, he began to educate Eddie Murphy how to do the stock market. How to go down on the floor and see how much pork bellies or whatever they were investing in was selling, when to buy, when to sell. And Dan Aykroyd, he was conceited. He was their boy, but when they picked Eddie Murphy, Dan Aykroyd got jealous, and Dan Aykroyd went from rich and prosperous to broke. But you have to see the movie. I forgot the name of it,
All
but
right. Yeah, I ain't seen that one.
yeah, it was invested.
So investing is real good too, because that's dealing with compounding that interest. It almost gives that well, gives that effect when you get a credit card, you pay all that interest on the credit card, but when you invest and it has interest on it, now you making money on that money like a credit card, but the rates on an investment are not as near as much as the rates on credit cards and stuff be.
Mm.
That's the crazy thing. That's why a lot of money marketers and stuff advise you to get out of your credit card debt as soon as possible or any other debt that has high interest rates because you're giving away money that you could be invested and making money on it. You could be investing that same money that you're giving away, to the credit cards, and it could be making money on the interest the same way the credit cards is making.
Mm,
That
okay.
then you can keep on investing this money into that investment and treat it like a bank because it's growing interest and you putting money into it every week, which 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 is why it's an investment because you're actually putting money into it and you ain't trying to touch this money like a savings account and it's actually growing your money over time. So when you go in 10 years, you look at that same investment, especially if you were still trickling money into it slowly, especially if you wasn't missing it, if you was putting a low enough amount of money into a stock every time you get paid, maybe even $20, you'll look up in a couple years. It's as long as you invested enough money where you ain't missing it, you will look up and you'll have so much compounding interest of that money that you done invested in. And that's
So
the
should
that's
I buy stocks and bonds? Would that be a good investment?
stocks. They got stocks, bonds, they got real estate. Um, they call them REITs. They got mutual funds. They got a lot of different things that you can invest in that will compound interest on your money. But it's just everything got different risks or different length on how much it'll grow or different criteria. Like you said, you got to know what you're investing in, do your research first. But an investment is an investment. All All of them is compounding on your money. The stock market always goes up. It's not in a trend. It's always in an upward trend because business goes around. And the companies that make it to the stock market are only the big companies. The small companies don't even make it to the stock market. You have to be a big and prosperous, probably worldwide company type company to even hit the stock market. That's why the gamble is always it's always upward trend. It's always a good investment if you was investing for long term. Now, when you get into trading, that's that's volatile because it's always up and down every second. But if you know what you're looking at, you can always predict it in a better favor, and you can put stop losses on your money so you can have a stop loss on your trade. So when you go in, you'll only lose $5 because you put a stop loss on it, or it'll tell it to sell it before it drops too low. So you got things in place that you can do to save yourself from losing everything.
Oh,
That's why you're supposed to educate yourself first. It's just like we're riding a motorcycle. You can jump on a motorcycle and think you know what you're doing, but you probably want to study first and you probably want to get your license first before you actually get on that thing and take off.
yeah, you would have to learn the gear pattern. The
Yeah,
gear.
you want to be familiar with what you're doing. But a lot of people don't do that, you know. A lot of people just jump right in and think they know what they're doing, think they know what they're looking at. That's how I did with investing. I just jumped right in. I just wanted to start getting my money into something because I just needed to do something. But it's even a way you can do that with the investing. You can set your stop losses and set your take profits and wait on it like that. And if it ever drops lower than your stop loss, it'll sell out and you won't lose no money. And if it ever rises up, it'll take profit. It'll sell but keep you in the game. Keep skin in the game. It's crazy how it works. That's why I said the technology is really crazy and with the trading stuff, but you got to know what you're doing. You got to know what you're looking at. You got to know the algorithms. You got to study that stuff, and it's a hard study. That's why not a lot of people are doing it. It's a very hard study, but that's the good thing about it. The harder something is, the more rare it is, the more lucrative it is. It's just
Hmm.
like, it's just like being a doctor or something. And traders make way more money than doctors, but it's a hard occupation. It's volatile. It's almost a gamble. So as long as you know what you're doing, you can save yourself a fortune and slowly make money. The more money you got to work with, the faster you can make money in the trading game and investment. But if you only invest in a little bit of money, your take profit will be pennies, maybe dollars, maybe tens. But if you was trading like $20,000 worth of stock, your take profit is gonna be $5,000 in 2 minutes because you got a $20,000 worth of stock that it goes up and down so quick. You be up to $20,000 in like 2 minutes, and then you got your take profit already set, and you got your stop losses set to sell you out before you lose all your bank account. But that's how they doing it. That's why I said you want to study that thing, and it's a hard study. Like I wouldn't be able to even teach you all the stuff that you need to learn about trading. That's why I just keep it short at investing. That's a long game, but the short game, the trading game, it's a hard study, but it's out there. The classes and stuff is out there. The books is out there. The videos is out there. Everybody's teaching it, but like I said, it's a hard study.
Hmm.
It's gonna take a long time for you to get it unless you studying like you in college or something. You gotta take it serious. You gotta get passionate about it, like with anything else. And to be a high performer, it's gonna take you getting passionate and serious about it. You might have to stop partying so much. You might have to. put some things to the side. You might have to sit down and open some books and take some classes, and you know,
Hmm.
but you still got to work hard and make your money so to invest. So life, man, that's how it works. But that's how the rich get rich. They work real hard and keep learning. You got to work real hard and continuously learn. And that's how they do it, man. Unless you got a trust fund, unless your parents did that for you or something crazy. But you gotta do it for yourself. You gotta work real hard and you gotta learn the money game. And
Okay.
and the younger you are that you start, the better the compounding interest is. That's why like the rich, they be giving they baby stocks. And you can put a penny stock in or a $5 stock in that thing for a baby. And that thing going by the time they get out of high school, that same dang on $5 stock will have compounding interest that'll probably pay through their college. But this is like stuff that no one ever taught us, man, because they keeping it a secret. They kept it out of our community. Camille said it ain't no secret and everybody know well, I guess they just didn't tell me.
Well, they didn't tell me either.
Pop said they ain't tell me either.
Depending on what classes you took. If you ain't take them classes, you ain't gonna know.
They don't teach the stock market in college.
Finance, they do if you take if you're in that finance accounting type of program, yes they do. You wasn't in that type of program. I was in business and accounting for high school, so yeah, I know
Some stuff they keep out of school for the elite.
Well, it depends on what school you go to.
about business and accounting.
Like Wood and stuff wouldn't teach you that.